Deposit institutions accept deposits from people and businesses and use them to finance their business. The most common way for a bank to be organized is as a commercial bank. Commercial banks are often called full-service banks because they offer a wide range of financial services. Commercial banks offer checking accounts, provide savings accounts, and make loans to individuals and to businesses. Traditionally, a savings and loan association known as S&L specialized in savings accounts and making loans for home mortgages. Today, many S&Ls use the word savings bank in their names. A mutual savings bank is a savings bank that is owned by and operated for the benefit of its depositors. The profits are distributed in proportion to the amount of business each participant does with the company. A user-owned, not-for-profit, cooperative financial institution is called a credit union. People in the same company, government agency, labor union, or profession often form credit unions. Serving members only, credit unions accept savings deposits and make loans. The other major category of financial institutions is non-deposit institutions. They do not take or hold deposits. They earn their money selling specific services or policies. People commonly buy life insurance to provide financial security for their dependents. Besides protection, many life insurance companies also offer financial services such as investments. People can choose to invest opportunities for long-term growth of their money through investment companies. Many investors own shares of one of the more than 60,000 mutual funds worldwide. A business that specializes in making loans for long-lasting or durable goods such as cars and refrigerators and for financial emergency is a consumer finance company. Because consumer finance companies make loans, they are part of the financial service industry. Buying a home is an important activity in society. Mortgage companies, along with other financial institutions, provide loans for buying a home or other real estate. People who do not have bank accounts may use checking cash outlets known as CCOs to cash paychecks and to obtain other financial services. Pawn shops make loans based on the value of some tangible object such as jewelry or other valuable items. Pawn shops commonly charge higher fees than other financial institutions and should usually be avoided. A financial institution can provide services for various personal and business activities. The services you use depend on your needs. Safe storage of funds for future use is a common need. One of the main services that financial institutions offer is accepting money from customers for safekeeping. A range of savings plans is available for this purpose. The ability to transfer money to others is necessary for daily business activities. Types of payment services include checking accounts, debit cards, online payments, and automatic withdrawals. Most people, businesses, and governments borrow money at some time. A business may want to borrow money to build a new warehouse or buy products to resell. Banks make loans because most of their income is from the interest they charge borrowers. Electronic funds transfer refers to the use of computers and other technology for banking activities. Electronic banking services include the use of automated teller machines, point-of-sale transactions, direct deposit, and automatic bill payment. Banks offer safe deposit boxes for storage of valuables. Because these safe deposit boxes are in secured areas, they are very safe places to keep jewelry, rare coins, investment certificates, birth records, a list of insurance policies, and other valuable documents. Many financial institutions help customers by offering financial advice and investment services. Banks can assist customers with decisions about buying a home, offer tips on money management, and help customers exchange U.S. funds for foreign currency. Many banks manage investments on behalf of customers. When they do this, the money or other property that is turned over for the bank to manage is said to be held in trust. This service can be offered through a trust company or through trust departments in banks. Most stores, restaurants, and other businesses accept debit cards issued by Visa and MasterCard. You may also know these cards are check cards. When the debit card transaction is processed, the amount of purchase is deducted from your checking account. Various web companies and banks now provide online bill payment services between buyers and sellers. When using these services, be sure to think about monthly charge as well as online security and customer service availability. The gift card your aunt sent you for your birthday is a stored value card. Prepaid cards for phone service, transit fares, highway tolls, and school lunches are common. Some stored value cards are disposable. Others can be reloaded with additional funds. These electronic wallets are similar to ATM cards. Their embedded microchip stores prepaid amounts as well as account balances, transaction records, insurance information, and medical history. Charging purchases with credit cards is common. Most credit cards issued today are multi-purpose cards. Consumers can use them at thousands of stores, restaurants, and other businesses. Bank credit cards have become very popular all over the world. MasterCard and Visa are two of the best known. Sometimes an annual fee must be paid for the privilege of using these cards. American Express and Diners Club, once called travel and entertainment cards, are widely used charge cards. Subscribers pay a yearly membership fee that is usually higher than the fee for bank cards. Some organizations allow their names to be affiliated with a credit card. These affinity cards are co-branded with an issuing bank. Many retail stores offer their own credit cards to customers. These cards show the name of the store that issues them. Customers can only use these cards at the issuing stores. Credit can make it easy for you to buy. You can shop without carrying much cash. Credit allows you to have the item now. A family can buy a dishwasher on credit and begin using it at once. Sometimes credit allows you to buy an item on sale at a good price. Some stores, especially department and furniture stores, send notices of special sales to credit customers. A person's reputation for paying bills on time is known as a credit rating. If you buy a credit and pay your bills on time, you gain a reputation for being dependable. In that way, you establish a favorable credit rating. Access to credit can help in unexpected situations. Sometimes you may not have enough cash and have an urgent need for something. For example, your car might need repairs. A common spending hazard of credit involves buying something that is more expensive than you can afford. Attractive stores, displays, and advertisements invite you to make purchases. If you become impatient or distracted in your shopping, you may not shop carefully. You may fail to make comparisons, causing you to buy at the wrong time or the wrong place. Stores that only accept cash may sell items at lower prices than stores that offer credit. Extending credit is expensive for stores. When customers do not pay as agreed, there are collection costs. Buying now and paying later may sound like a good idea. If too many payments need to be made later, the total amount due can become a problem. Banks, credit unions, and other financial institutions offer a choice of savings plans. Regular savings account, certificates of deposit, and money market accounts all provide a safe location for storage of your money. A savings plan with a low balance is a regular savings account. Usually you may deposit and withdraw money as needed. These accounts pay interest while keeping money safe. A certificate of deposit allows you to earn higher interest rate than a regular savings account. This savings instrument usually requires a minimum deposit of $100 to $1,000 or more. A money market account pays a variable interest rate based on various government and corporate securities. Interest paid on money market accounts reflects the current rates of interest being paid in the money markets.